Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Well, 2013 was a good year for Japan ETFs. Let's take a look now and see what 2014 holds with our ETF research director, Nina Mishra, who's going to start off with a little Abenomics.
Yes, it has been little more than 1 year since Shinzo Abe took over as the Prime Minister of Japan, and he introduced this very aggressive policy, which is popularly known as Abenomics, to put Japan back on the growth track. And it basically uses three, what they call as arrows. The first arrow is massive monetary easing. Second arrow is flexible fiscal policy. And the third arrow is structural reforms. The first two arrows have been used very well and very effectively. Bank of Japan has been easing massively, and they aim to reach an inflation target of 2% within 2 years. The government has introduced a couple big spending packages, one in January last year and one in December, as early as December of last year. But any tangible work relating to the third arrow, which is structural reform, still needs to be done. They have just made some beginning over there. Now let's take a look whether it has been effective. And I believe the initial phase has been very effective. The economy has been growing very well. In fact, during the first half, it grew at around 4%, which is one of the best growth rates in the developed world. Inflation has been rising, which means that the country may finally come out of its 2-decade-long deflationary spiral. Industrial output has been rising, and Japanese yen has been going lower. It is now near its 5-year low, and which is very good for Japanese exporters. And Japan being an export-oriented economy, it is good for the economy as well.
And overall, how have the Japan ETFs done? Yeah,
on this slide, I have the comparative performance of some of the popular Japan ETFs. Now, Japan is an interesting case of international investing. It highlights the importance of currency being an important factor in international investing. Japanese stocks have been going up and the yen has been going down. So the ETFs, which track only the Japanese stocks, they haven't done so well. The most popular, the largest Japanese ETFs called EWJ has returned about 27%, which is not, but relatively not so well. It has returned 27% last year, whereas the two other Japan ETFs, which hedge the currency factor, they take out the currency risk and track the stocks, they have done very well. DXJ is up about 44% this year, in the last 1 year, and DBJP is up about 52% last year.
So what's ahead?
I think despite this recent bull run last year, there is still scope for Japanese hedged ETFs to go up. That is because the Bank of Japan is continuously easing. The government has been spending a lot. And because of gradual tapering in the US dollar may go up further against the Japanese yen. And further, despite the surge last year, the valuations are still very close to historical averages. They are nowhere near bubble levels or peak levels. So there is still a lot of scope for the Japan hedged ETFs to go up in the year 2014.
Okay. So first Japan hedged ETF that you want everyone to know about is from Wisdom Tree.
Yes. This is one of the most popular Japan ETFs. It's a hedged ETF. It tracks the equities while hedging out the currency risk. The ticker is DXJ. Mitsubishi, Toyota, and Canon are among the top holdings. It charges 48 basis points in expenses, and it's a Zacks rank 2 ETF.
And then there's the DBX trackers, MSCI. Well, where do they come up with these names?
Yeah, very complicated names. The ticker is DBJP. And this was the best performing last year, 52% return. But despite its excellent performance, it's not so well known. It has just about 350 million in assets under management. Toyota, SoftBank, and Mitsubishi are among the top holdings, charges 50 basis points in expenses. And this is also a Zacks rank 2 buy-rated ETF.
So just to clarify, it's the Japan hedged ETFs
Yes, exactly.
that have done well, and you expect to do
Right,
even
because of the
better.
currency factor, Japanese stocks will continue to go up, whereas the currency may continue to go down.
Okay. Do you own either of these
No,
two?
I don't.
All right. Check out other ETF information and commentary in the ETF section of our website, Zacks.com, if you're not there already. With Nina, I'm Terry Ruffalo.